I'm going to tell you something about this notion that the next 72 hours are critical for markets. It's going to make you uncomfortable, and it should make you uncomfortable because comfort is the enemy of clear thinking. Every financial news network is breathlessly counting down the hours like we're launching a rocket to Mars. Every market analyst is posting urgent updates about critical inflection points and make or break moments. Every trading guru with a YouTube channel is telling you that fortunes will be made or lost in the next 3 days. And if you're not positioned correctly right now, you're going to miss the opportunity of a lifetime. And I'm sitting here at 99 years old having watched this exact same circus performance, exact same act, probably 500 times in my life, thinking the same thing I always think, which is that when everyone agrees something is urgent and critical and time sensitive, that it's usually the exact moment you should slow down and ask yourself who benefits from you making rush decisions based on artificial deadlines. Let me be absolutely clear about what's happening here, because the financial media complex has become very sophisticated at manufacturing urgency to capture your attention and your trading commissions. Markets don't operate on 72-hour cycles. Real businesses don't change their fundamental value because of what happens over a long weekend. The actual economy, where real people make real products and provide real services, doesn't give a damn about whether some technical indicator crosses some arbitrary line on Tuesday versus Thursday. What we're watching is not economics. What we're watching is psychology, and specifically the psychology of getting you to do something stupid with your money because you're afraid of missing out or being left behind. Here's what I've learned in nearly a century of watching markets, and it's one of the most valuable lessons I can share with you. The moments when everyone tells you that you must act immediately are almost never the moments when you should act immediately. The moments that are actually critical for your financial future are the ones that unfold slowly over years and decades, not over 72-hour periods. The decision to save 20% of your income instead of 10%, the decision to buy businesses with durable competitive advantages instead of chasing whatever's hot, the decision to hold quality assets for 30 years instead of trading them every time some talking head declares a new crisis or opportunity. Those decisions matter. What happens in the next 72 hours? That's just noise disguised as signal. Think about the incentives here, because understanding incentives is the key to understanding almost everything in finance and business and human behavior. Who benefits? When you believe the next 72 hours are critical, the brokerage firms benefit
because you make more trades and they collect more commissions. The financial media benefits because you stay glued to their channels watching advertisements. The newsletter writers benefit because you subscribe to their premium services promising insider information. The option sellers benefit because you buy expensive insurance against moves that probably won't happen. Literally everyone in the financial services industry benefits from you believing that timing matters more than patience and that the next 72 hours will determine your financial future. The only person who doesn't benefit from this belief is you. Now, I want you to think historically about critical moments in markets, because history is the best teacher we have if we're willing to learn from it. Was October 1987 a critical 72 hours when the market crashed 23% in a single day? It felt critical at the time. People were convinced the world was ending. Fortunes were lost. Careers were destroyed. And yet, if you had simply held quality businesses through that crisis and ignored all the urgent calls to action, you would have done spectacularly well over the following decades. Was September 2008 critical when Lehman Brothers collapsed? Absolutely, it felt critical and frightening, and like the entire financial system might implode. But the people who panicked and sold everything at the bottom missed one of the greatest bull markets in history. The people who stayed calm and bought quality assets at distressed prices made fortunes. What about March 2020 when COVID shut down the global economy? Another supposedly critical moment where you had to act immediately or miss everything, and yet the best decision was to do nothing or to buy more of what you already understood, not to panic or make rushed decisions based on 72-hour time frames. The pattern never changes because human nature never changes. Markets go through periods of volatility and uncertainty. During these periods, the media and financial services industry amplify the urgency because urgency sells. Fear sells. The promise of exclusive information that will help you navigate the critical moments sells. And people fall for it every single time because we're wired to respond to threats and opportunities that seem immediate, even when the rational response would be to zoom out and think in decades, not days. Here's what's actually critical for your financial future, and I can tell you this with certainty after watching markets for almost a century. What's critical is whether you own businesses that produce real value. What's critical is whether those businesses have pricing power in inflationary environments. What's critical is whether you're paying reasonable prices for quality assets. What's critical is whether you have the temperament to hold those assets when everyone else is panicking or euphoric. What's critical is whether you can ignore noise and focus on fundamentals. None of these things have anything to do with 72-hour periods. All of them have to do with years and decades of patient, intelligent capital allocation. You know what I've never seen in all my years? I've never seen someone build lasting wealth by correctly timing 72-hour market windows. I've seen people get lucky occasionally. I've seen people make one spectacular trade that they then spend the rest of their lives trying to replicate unsuccessfully. But I've never seen sustainable wealth creation based on short-term market timing. You know what I have seen countless times? People building enormous wealth by buying quality businesses at fair prices and holding them for 20 or 30 or 40 years while everyone else was trading in and out based on whatever seemed critical that week. Warren and I built Berkshire Hathaway into one of the most valuable companies on earth, and we never once made a major decision based on what might happen in the next 72 hours. We never once said we need to buy this company right now because the next 3 days are critical. We did our analysis. We waited for good prices. We bought quality businesses. We held them. That's it. The most boring strategy imaginable. No urgency. No manufactured deadlines. No breathless countdowns to supposedly critical moments. Just patience and discipline and a refusal to let other people's urgency become our emergency. Think about what happens when you make decisions based on artificial 72-hour deadlines. You don't have time to do proper research. You don't have time to think through all the implications. You don't have time to consider alternatives. You're forced to act on incomplete information because someone told you that waiting is dangerous and that opportunities don't last. This is exactly the mental state that leads to terrible decisions. This is exactly when you buy things you don't understand at prices that don't make sense because you're afraid of missing out. This is exactly when you sell quality assets because you're convinced that the next 72 hours will bring catastrophe if you don't act immediately. Let me tell you what's probably going to happen in the next 72 hours. Markets will move up or down by some amount that seems significant in the moment, but will be completely irrelevant when you look back 5 years from now. Some economic data will come out that everyone will overanalyze. Some central bank official will make some statement that gets parsed word by word for hidden meanings. Some company will report earnings that beat or miss expectations. None of this will matter for your long-term financial future unless you let it matter by making rushed decisions based on artificial urgency. Here's the uncomfortable truth that the financial services industry doesn't want you to understand. The best investors I've known over my lifetime are the ones who did almost nothing most of the time. They found good businesses. They bought them at reasonable prices. They held them for decades. They ignored the daily noise and the weekly crises and the monthly urgent calls to action. They were boring. They were patient. They made very few decisions because they understood that in investing, doing less is usually better than doing more. The only people who benefit from you constantly making decisions based on 72-hour urgency are the people collecting fees every time you trade. Now, I'm not telling you to ignore everything happening in markets. I'm not suggesting that you should be oblivious to major developments or fundamental changes in business conditions. What I'm telling you is that real fundamental changes don't happen in 72 hours. Real fundamental changes unfold over months and years. The shift from retail stores to e-commerce didn't happen in 72 hours. The rise of mobile computing didn't happen in a critical 3-day window. The aging of developed world populations creating long-term healthcare demands didn't happen over a weekend. These are the kinds of fundamental trends that actually matter for long-term investors. These are what you should spend your time understanding, not whatever manufactured crisis the media is promoting this week. Here's what you should do instead of obsessing over the next 72 hours. Look at what you own and ask yourself whether these businesses will be producing value 10 years from now. Ask yourself whether you understand how they make money. Ask yourself whether they have competitive advantages that will persist through various economic environments. Ask yourself whether you're comfortable holding them through the inevitable periods of volatility and uncertainty. If the answers are yes, then it doesn't matter what happens in the next 72 hours or the next 72 weeks. If the answers are no, then you shouldn't own them, regardless of whether someone claims the next 3 days are critical. The financial media needs to manufacture urgency to survive. They need you to believe that every data point matters and every market move is significant, and every 72-hour period could be the one that makes or breaks your financial future. That's their business model. That's how they keep you watching and clicking and subscribing, but it's not how you build wealth. Wealth gets built slowly and boringly by people who can resist the siren song of urgency and maintain discipline over long periods of time. I've seen this pattern repeat itself for nearly a century now. Markets go through uncertain periods. The media declares the next few days critical. People make rush decisions based on incomplete information and manufactured urgency. Some get lucky and make money, which reinforces the behavior. Most make mistakes that cost them dearly. Then markets stabilize. Life goes on. And the same people who declared the last 72 hours critical are now declaring that the next 72 hours are critical. The cycle repeats endlessly because it's profitable for everyone except the investors who fall for it. Here's my challenge to you. The next time someone tells you that the next 72 hours are critical for markets, ask yourself what they're selling. Ask yourself who benefits from you believing that timing matters more than patience. Ask yourself whether the truly wealthy investors you know made their money by correctly timing 72-hour windows or by holding quality assets for decades. The answer will tell you everything you need to know about whether you should pay attention to manufactured urgency. The next 72 hours aren't critical for markets. The next 72 years might be if you're young enough. What's critical is having the temperament to ignore noise and the discipline to stay focused on what actually matters. What's critical is understanding the difference between real fundamental change and manufactured media urgency. What's critical is refusing to let other people's deadlines and other people's fear and other people's profit motives determine your investment decisions. That's what separates successful long-term investors from the masses who chase every urgent opportunity and react to every manufactured crisis. So when the financial media tells you the next 72 hours are critical, I want you to remember something very simple. In 99 years of watching markets, I've never seen a 72-hour period that mattered more than decades of patient, intelligent capital allocation. Not once, not ever. And I've seen plenty of people destroy their wealth by believing that short-term timing matters more than long-term fundamentals. Don't be one of them. Let me give you some concrete examples of what actually matters versus what the urgency merchants want you to focus on. What actually matters is whether you're saving enough of your income to build capital over time. What doesn't matter is whether you buy on Tuesday or Thursday of some supposedly critical week. What actually matters is whether the businesses you own can raise prices without losing customers when inflation hits. What doesn't matter is some technical indicator crossing some arbitrary threshold during a 72-hour window. What actually matters is whether you have the emotional discipline to hold quality assets when they're down 20 or 30%. What doesn't matter is correctly predicting what the market does in the next 3 days. The reason I'm being so harsh about this manufactured urgency is that I've watched it destroy more wealth than almost anything else in investing. I've watched people who are on track to build substantial wealth over their lifetime get derailed because they couldn't resist the constant drumbeat of crisis and opportunity. I've watched people trade in and out of positions based on whatever seemed critical. That we can end up with mediocre returns and huge tax bills. I've watched people abandon good long-term strategies because they were convinced that the next 72 hours required some special action. Every single time, the people who did nothing or who stuck to their boring, disciplined approach ended up better off than the people who believed the urgency. The financial services industry has become incredibly good at making everything seem urgent and critical. They've figured out that urgency drives engagement and engagement drives profits. They've learned that if they can convince you that the next 72 hours matter enormously, you'll watch more, check your portfolio, more trade, more subscribe, more, and ultimately enrich them while impoverishing yourself. It's a beautifully designed system from their perspective. From your perspective, it's a trap that leads to worse returns, higher costs, more stress, and less wealth over time. Here's what I want you to take away from this. The next time you see a headline about critical hours or days ahead, I want you to pause and think about what would actually change in your life if you ignored it completely. Would you be worse off if you didn't know that some analyst thinks the next 72 hours are critical? Would your retirement be in jeopardy if you missed whatever supposedly important market move might happen? Or would you actually be better off by avoiding the stress and the temptation to make rushed decisions based on incomplete information? I think you know the answer. The truly critical decisions in investing are the ones you make maybe once or twice a decade. The decision to buy a business at a genuinely attractive price, the decision to hold through a genuine crisis when everyone else is panicking, the decision to sell something that's become genuinely overvalued. These decisions take time and thought and analysis. They don't happen in 72-hour windows. They happen when you've done your homework and an opportunity presents itself and you have the courage to act when the time is right, regardless of what the media is saying about critical moments. I've built wealth over my lifetime by ignoring probably 99% of the supposedly critical moments that the financial media has declared over the decades. I've built wealth by focusing on the 1% of decisions that actually mattered, the decisions to partner with Warren Buffett, the decisions to buy certain businesses at certain prices, the decisions to hold those businesses through multiple market cycles. None of those decisions were made because someone told me the next 72 hours were critical. All of them were made because I did my analysis, understood what I was buying, and had the patience to wait for the right opportunity. So no, the next 72 hours are not critical for markets. What's critical is whether you can develop the temperament to ignore this kind of manufactured urgency for the rest of your investing lifetime. What's critical is whether you can focus on fundamentals instead of noise. What's critical is whether you can be patient in a world that's constantly trying to make you impatient. Get those things right, and the next 72 hours become completely irrelevant to your financial success.